Ladies and gentlemen of the crypto space, we're live on a Friday, May 16th at 11:48 a.m. A little late, but better late than never. Okay, so what are we going to start the stream and say the charts look great? We're going to say the charts look bad? We're going to say the world is at a junction, a turning point, a precipice. Everything's about to crash. Everything's about to explode. Those are the common headlines. That's what people like to hear. That's what people like to talk about. I mean, look at the chart. Everyone's talking about the 30 year, and basically it looks bad. So, the point of my content is sure, I agree. I agree. If this goes past 5% and you get a breakout that above literally 5%, which was set in January of this year, you're talking about October 2023 territory. And then dare we break five and a quarter, which would literally be a breakout, which would be a historic high interest rate compared to 2007. Oh, the horror. Yes, that would be pretty bad, but that's not the point. Whole point of the whole goddamn story I've told over these years is I don't give a shit. I need something else to go by. I need different rules. I need simplicity. Oh, the markets look bad. Oh, the markets look good. I'm going to bet that the markets are going to go up. Fuck about that noise. Noise will drive you nuts. What you need is something to find your peace, your calm. And those are the three rules. And no, we're not talking about the three laws from iRobot. We're talking about the captain's three rules, which surprisingly may be comparable to the actual three rules from that movie, but that's another story. Anywho, so the title of the stream today was what's it's the binary bet because we have absolute clarity at this point where the global financial system is heading from a policy standpoint, not from a volatility standpoint, not from a shit may hit the fan standpoint, not from it may break and fall apart and collapse. Oh my, the horror. Then everyone's in a shit situation, and then you realize there's only one bet, and that's this prepping. Look, this is your binary bet. If you're afraid and you fear and you have certainty and you have doubt that the system is going to fail and that the stock market is going to crash, these are the types of videos you should be watching for investment advice. What kind of multi year or 10-year, 15 lifespan, shelf life goods do you need? What do you get for the short term? What do you get for the midterm? What kind of packaging? How do you handle water? How do you handle filtration? This is your bet. So do you understand my point? Everyone's like, should I buy Bitcoin now or should I wait for it to go down? No, motherfucker. If you're waiting for it to go down, you should be a prepper because you're afraid. And you're never going to be able to own that type of cash because you'll be too afraid. So either you get over that fear and you understand that the entire system is a binary bet that it continues or it fails. And then the obvious result is what do you do about it? Because that's what everyone talks about. Everyone's like, do you think this crypto will go up? What are your short term targets? And you see it like pick your favorite crypto dude that talks about tickers. What's your target? It's like you tell me your target and I will do it. I won't think about it at all because that is the best way to show that I have no critical capacity. You've seen people ask that question, what's your price target? And then you're like, dude, do you have any thought processes at all? Okay. So I like this. This is great. If you have fear, you should also prep. You should have preferably an underground type of not a bunker, you need a frickin' bunker, but a shed. So you dig a hole and you put the shed underground. So it's an underground shed. You need an underground shed and probably should be watertight. And you're going to have some serious expenditures if you want it airtight with filtration and certain types of protections, depending on how fearful someone is. But this is it. If you are afraid of Bitcoin not going up, you should be a prepper. And this is a great video. This guy has a nice situation going on. And then again, if you are not fearful and you've really finally figured it out that this is a managed financial system, and yeah, obviously, it's designed to fail at some point, or it's designed to look like it's going to fail. But that's the point. Is the managed financial system, so they're managing it. So then you look into the new interesting things, and there's not many new interesting things from an investment standpoint. But in order to understand the landscape in which you invest, which we do, and we've talked about our investments in the five businesses of crypto, credit, both foreign exchange, credit, derivatives, liability, um, oh my God, liquidity financing, and liability printing. And to understand those five businesses, you have to understand shit like this. So, folks, be it on the stream or in real life or whatever, they're like, how do you understand all this? It's because I see headlines like this. And this has built over the years to the reality that you understand, like, oh, this is cross chain. So that's like capital rails, banking rails, foreign exchange to a degree. If you're talking about like cross curve, which has capital rails kind of intertwined with exchange. If you haven't seen that, it's really cool, the user interface that they have, because it's not just cross chain. It's pick a chain, so Ethereum, uh, and then you go over here and you go to like Arbitrum. It's like WBTC and Arbitrum. So this is not just cross chain. There's also a swap involved, an exchange, foreign exchange, an FX. So that's pretty cool. That was the curve DNS issue the other day. Beautiful. So I just love this protocol. It's one of my favorites. And layer swap obviously is old school. It's been around. It's done well. Not compared to Stargate. I think Stargate's far in the lead, but that's why I have this list up here. This is my go-to if I need to move capital from one network to another. You start with a cross, and that's where Uniswap went. Um, Threshold, I hold on to this if you ever want to get Bitcoin to and from um, EVM networks. Use TBTC. You're not using WBTC because then, well, I guess you could use WBTC Garden. I haven't checked on where they are with regard to functionality, but I would imagine they're still operating. So this gets you Bitcoin from WBTC, and Threshold gets you Bitcoin from TBTC. And ThorSwap, if I guess they're still functional. We haven't heard much from their drama, but I think the protocol is still. Oh, is that old? I don't know. Is it still functional? I'd literally have to double check, but I wish they never got into their lending, um, their choice to offer that product, because I always liked their support for Cosmos. Very few had support for Cosmos. Okay, Cosmos, Atom. Let's see if it reconciles. So Ethereum, can I do USDC? No. So Ethereum, ETH. Okay. 50. Okay. Not bad. Kind of slippage is that? Slip protection. Fascinating. No protection. Estimated ETH 20 seconds. Okay, looks like things are still functional, I guess. Fastness, yay. Okay, let's just see. Just saying. What if you have a nice swap you gotta do? All right, that's not bad. 40 bucks. It's not bad at all. Looks like we haven't heard anything about their debt situation, but it seems like everything is still functioning very nicely. That's nice. So here's my list. No one talks about Rubik, but this is a bit of um, uh, an exchange of exchanges, an aggregator of sorts. I always liked them. They're not very popular, but I've always liked this product very much. And it works great. It's just an aggregator. Then you got your Stargate. I could close some of these. Metal if you ever need. I don't think they have support for any of the fast bridges, but so they have their Canonical, as they call it, bridge. So if you're ever vote on a metal LP on Velodrome, yeah, this is how you get back to mainnet, and this will be about an 8-day waiting period. So I don't need that. Anywho, so I guess the whole point of that was the second tab. Um, and they mentioned Linnea, which is nice. So Linnea is high on the list given how Kingdom has treated Linnea as compared to Arbitrum or Mantle. So Linnea is up there. Linnea is, I think, meaningful. I find it interesting that, well, I guess it's not that I just find it. It is interesting that Consensus went with their own L2 instead of what Arbitrum and Optimism built much earlier than anything they built. Um, that's the nature of this kind of a playground. Build whatever the hell you want to build, and that's exactly what they did. Okay, so Linnea has much more attention than Arbitrum. I mean, Optimism as well. Optimism is a little bit lackluster, maybe comparable to Arbitrum, and Linnea has a big name behind it. Albeit, I don't know. I still think Optimism has the biggest aura, so to speak, the halo. Like, oh, that's a big narrative. But then I always come back to Arbitrum also has the orbit. So how are you supposed to really draw conclusions? And are you supposed to say just because of where liquidity is flowing, that is invalidating um, the potential for Arbitrum? So liquidity's evacuating Arbitrum. Is that really invalidating Arbitrum as a significant network? I don't think so. I just don't. Anywho, that's my 2 cents, some thoughts on this post when it came up. Liquid EV2 coming back online on the 19th. I look forward to that. Before we continue, let's do some of these comments. Eunice, thank you. I appreciate the kind words. Arrow, good morning. Can you please explain again your idea that crypto will move to newer all-time highs, yet SPX won't? SPX is a United States boomer meme coin market, meaning equities, meaning the only reason people invest in equities is US equities. They don't know any better because it's the same shit that everyone invests in. So maybe that's the only reason they invest in it because every other dumb motherfucker also invests in it, which is actually a reason to invest in it. Michael Saylor talks about it the best. Everyone just crams into the same trade. So 401k passive flows into the same shit. Everyone's piling into the same shit. Michael's most recent presentation was very nice because he talks about outperforming the S&P or outperforming the indices, NASDAQ. And so what, like 80, 90% of companies won't outperform the index. So why would you invest if you have a low likelihood of outperforming the index? And if the index is on average going to perform to a certain degree, 12%, why would you invest in any of this compared to stuff like crypto, especially Bitcoin, which is what he presents about? But then you have significant outperformance in the stuff that we invest in, much more than Bitcoin. Bitcoin, I wrote a post yesterday where you'll probably get a CAGR of 15 to 30% for the next couple years. And there's a high likelihood that that goes out for about 10 years and then diminishing returns at some point. But 15 to 30% is also a wide spread, so there's a good margin for error in there. But 15 to 30% over the next couple of years sounds quite reasonable. And if you're going to get 15 to 30% on Bitcoin as a speculative expectation, there's a that's a significantly better investment thesis than anything you'll get in the equities markets, unless you have specialized knowledge and you're betting on options and get your expectation is 1,000%, not 15 to 30%. But I'm in the business of high likelihood and expected results. Now that's not options, that's gambling. I'm in the business of investing. So I want that 15 to 30%. And a CAGR changes everything because that was the calculation. Did you guys not see that calculation? Uh, yeah, cute little calculation. It wasn't. Yeah. $20,000 invested annually for 10 years. Now, here's the thing. This is where every kid will always get it wrong and they'll never get it right. They they work at Do you get your first job? I remember my first jobs. I was a lifeguard back in Queens in New York. And I have cousins down here in Florida. I have a cousin that works at Chipotle. What does he do with his money? He's not investing. I wasn't investing. No kid's gonna do it, right? That's that story I tell you about if you graduate high school and it's you should finish school. That's important. Learn your basics, and then what you do is get an average job. You work at Best Buy and you make 40 grand a year, and invest 20 grand, like this post says, 20 grand invested annually for 10 years. And if you're able to get a 30% CAGR, you got $1,100,000 in 10 years. That's what CAGR, that's what compounding does. Very few understand it. Einstein called it the eighth wonder of the world. That's just mathematics. It's just exponentials. So 30% is a Druckenmiller territory, who's done ridiculous, has a ridiculous CAGR for decades. Van X says Bitcoin may hit 15, 25%, less than equal to 25% over 20 years. Big numbers. So if you could get 20, 25% CAGR over the next years and you compound your capital, you change your life. Anyway, why was I digressing? Oh, so I was responding to Arrow's post about, well, that's not really the answer to your question. So I just think US equities are a shit investment. Just there's nothing I like about it. You're dealing with people making bad decisions on boards that are further making bad decisions, and there's too much OpEx and CapEx. They have debt, whereas these businesses we've discussed over the last years have no debt, no OpEx, no CapEx, no real estate, no employees, no expenses, no nothing, no nada, and millions and millions and millions of dollars of revenue. So that makes these the ultimate businesses we've ever seen from a value investor standpoint. So anyway, so if US equities are shit, why would crypto do good? Because crypto is not a US market. People invest in the US because of how their sentiment is about the US. Is the US outperforming? But what if there's a bull market in European equities or Asian equities or South American equities? The thing I've always noted is that crypto is associated with the bull market in equities. And that's what everyone also correlated as well. They said, oh, if there's a bull market in equities, crypto is highly correlated. And then I came along and said, yeah, which country? If you have a raging bull market in Indian equities, do you not think that's going to bleed over into crypto? Because some Indian, like 2 dozen Indian firms come out with crypto products on their equities market, and crypto's in the headlines, crypto's in the news, crypto this, crypto that. It's going to bleed over into the crypto markets. Crypto is an emerging market of emerging markets, accessible to all markets, but of no market. Has nothing to do with U.S. equities. It was always an indirect correlation to U.S. equities, but it's not. The point wasn't it wasn't U.S. equities. It was the concept of equities. It was the concept of exuberance. You can have exuberance in any market, and the capital is going to bleed over into crypto. What matters is the headline and how tightly coupled that headline is to a particular market that's experiencing exuberance. In Britain, if you have bullish equities. I mean, things are going up 20% a day. And headline after headline is this equity is doing this with crypto, or this bank's doing this with crypto. What is going to happen to crypto? The same thing that has always happened when people say there's a correlation between US equities and crypto, except now there's a correlation between British equities and crypto. Okay? So the correlation was always there between equities and crypto, just didn't no one ever talked about which country because everyone that talks, every social media expert has this bias. And it's an unspoken bias. They're always speaking from the United States. And I'm like, the fuck? It's some exceptionalism. I would call it narcissism. Like, all right. You're not going to understand crypto. You're not going to understand investing unless you understand it from outside of the bubble, which is the US. You better understand it from the rest of the world. Okay, great. That is exactly what leads into understanding what the hell a dollar is, what the hell the euro dollar market is, and what the hell things like this are, ladies and gentlemen. This is on my list. This is an immutable euro dollar product that uses Ethereum as collateral to print dollar liabilities. What's the difference between this and other products like Abracadabra or CRVUSD or any of the other dollar products we follow? Inverse finance, Frax finance, even my's still on the list. Dyad, they still around. Go, big dollar liability product. So what's the difference? Oh, this is brand spanking new. You got maximum risk. Look what happened when they launched V2, V1. Then they got a relaunch. Well, all right, that's fine. That's the same thing. Similar thing happened with Curve, CRVUSD. So it's not a bad thing to relaunch, and it's an immutable protocol. So I appreciate that. So when you have something new, there's maximum risk. How do you handle risk? Position size. Okay. So I opted for exposure. I think I'm down probably 50% on what I bought. Great. It deflates, it reinflates. What matters to me is I have exposure to this dollar liability product. It could do very well. So if you do good investing over years, you have excess capital, which means you could afford diversification. If you don't have excess capital, you can't afford diversification. You got to remain concentrated. What constitutes excess capital is a subjective um, evaluation, meaning only you could say, all right, I have excess capital, or I have appropriately sized portfolio, or I have appropriately sized positions. I have good exposure to positions. So the hardest thing about investing is to start defining your own rules and start defining your own conditions. That's the hardest thing because every then it's understandable to start asking questions like, "What's a good sized position?" Or "What's a how do you balance a portfolio between cash and investments? I don't have enough money. Should I be investing or should I just be focusing on cash products like Bitcoin, Ethereum, gas tokens?" All right. What's the threshold between what's the threshold of cash before you invest, start investing in cash flow? Maybe you never are interested in cash flow. So these are just very rhetorical questions, but these are the questions that everyone needs to answer in order to figure out what kind of investor you are. Are you an investor that talks about investing only in the terms of cash flow, like myself? Or are you an investor that says owning Bitcoin is an investment? Not like myself. I don't consider Bitcoin an investment. I consider it a collateralizable cash, which is a cash-like instrument of sorts. Anywho, oh, take a look at everything, why don't you? There you go. So I look forward to this relaunching. I'm happy with my exposure to liquidity. Um, my two favorite products. It's not MoonPay because I haven't used it, but this Spritz. It used to be Juno, but they experienced significant technical issues. There was no losses, but it was a technical issue, and that's the problem with traditional finance. Bullshit. I mean, not that that bullshit doesn't exist in crypto. Obviously, there's hacks and shit all over the place. I love this product. I've used this product so much, and it works great. They used to have instant withdrawals for a bit, and they've gone through some changes. It's basically instant. It's same day, which is crazy. It's not an ETF. It's literally an it's literally a couple hours at most, in my experience. At one point, it was instant. I swear, you would literally click it, and you would have an instantaneous deposit in your bank account. And I was like, "What's that? The Fed Now program?" That was so cool. So now they got. I look forward to getting a card, and now they have digital cards though. And who the hell doesn't do tap to pay? Tap to pay is everywhere right now in the U.S. So I happen to look forward to their new card, and I mean, their product is invaluable. Who else does it like this? I mean, who seriously at this point in crypto, who's been here for years, has like a Coinbase account or I mean, I have a Kraken account. I just don't use it. I don't even have a Coinbase account. Um, I just don't want to deal with that bullshit, all that drama, all that shit that goes on. And you see it on social media, all this shit. I don't want my name in that system. I don't want to deal with that bureaucracy. I just want to deal with capital and manage my books. I want to keep things as simple as possible. So how do you do that? You don't use centralized exchanges, especially if you're just on ramping and off ramping. And if you're trading, you're not investing. And if you're trading and not investing, what's the point of listening to me? I don't talk about trading. I only talk about investing. And you can't really do any investing on a centralized exchange, can you? There's nothing to invest in. There's no cash flow. So it's not an investment. Anyway, hope that helps, folks. Greetings, Cap. Much pleasure. Good afternoon. Raul, I thought mine was dead deep. I have no idea. It's in my dollars section. Abris still humming along because they pay very nicely, as we know, inverse finance. Spark, obviously. USDS and old school DAI. Okay. Dollar products. So it just so happens I look forward to this dollar product. Sports finance. What was the last thing on my list? Oh, that was what I opened with the CAGR. CAGR is so underappreciated, and kids could just do incredible things between their in their 20s. By the time they're 30, what a shame. What a shame. Can you imagine being 30 and having like 3 mil and making like 250, 300 grand a year just because you invested right in your 20s. Anyhow, I thought FX save mechanic. Okay, all right. F of X. Derivatives. Derivatives. Not necessarily dollar liabilities. In the same sense as a primitive, just a true collateral, print liability, managed pay, guys. I first off, with any, I truly and honestly don't know how USDC and USDT manage peg so well. It reminds me of like a government entity. Oh, it's a managed financial system. How do you manage peg? So the only way to really manage peg is with interest rates, and that's why um, liquidity should do well. And that's why CRV does well. You just need a supply sink, and that's exactly what resupply did for CRV. Let's see what happens with liquidity. Um, but you need dynamic interest rates because dynamic interest rates is what forces or controls peg from the downside. Peg from the upside is easy; it's just peg keepers. Peg from the downside requires variable interest rates to threaten collateral. You threaten collateral, which is what forces repayment, which is literally what manages downside peg. I only use Coinbase for off ramp, but yeah, man, good spreads though. Well, I don't know. I use spreads. I'm gonna start like posting some stuff for them and get some affiliate links up so folks could actually use a very seamless, straightforward quality product as compared to a centralized exchange. I don't understand the centralized exchanges anymore. I don't understand the need for them. Jane and Joe and mom and pop aren't trading, so what the fuck are they doing on Coinbase? You know what it is? It's they dominate the headlines and the story, and and I guess on chain is difficult. So there's some bias. I definitely have some bias because this is stuff we've done for years, so it's come second nature. Um, I think it was actually Arrow who posted it, so props. Which one? May need a different opinion. Well, everyone's gonna have a different opinion about everything, and that's the whole point, my friend. You know, everyone has their risk tolerances. Look, hesitant to use spread seems small. I've been using it for going on 3 years. Been going on 3 years. I've put 5 figures through in a clip. I moved 10 chip the other day to pay for part of my roof. You get it in an hour. I don't know. It works great in my opinion. I've have a high opinion of that product. I guess you gotta click buttons and products need to prove themselves. And Spritz has, in my opinion. No, you're not wrong. You're right. And that's the problem and difficulty with new products and services. Um, Trust is a very difficult thing to acquire and to offer, you know, to acquire as a consumer and to offer as a service provider. Trust is everything. Irony is trust comes down to restaurants. I think people take that for granted a little bit. Um, People have a little bit too much trust in too many things. I think it's just, food for thought. Try it with 50 bucks. Why not? I don't know. I just, that's all I use. I don't use anything other than spreads currently. And it's been like that for quite some time, at least a year. I think Juno had their issues last year in 24, or maybe Juno had their issue in 23, and I've literally just been using spritz for the last 2 years. Just been spritz though. So let's see what MoonPay does. Is this just European though? I don't know. Gemini getting some eyes on MasterCard. So these are big. When I see shit like this, I'm like, oh my God, everyone. When I see these names about dollars, I get so bullish about liability printers. That's where the money's at. That's where the money's going to be, and that's where the profits are going to be, and that's where the revenue is going to be. And that's when this product is going to be very useful for investors. Anyway, let's keep it short and sweet and to the point today. Um, and I hope stuff like that helps. How else are we supposed to bet? It's a binary bet. Either we persist with the investments that we've chosen, and if you're still on the deciding what investments, I don't know what you're doing. I mean, we've been talking about this shit for years. Like such a biased stream in that regard. This stream, me talking right now, is so biased. I know because a new person's joining is like this guy doesn't talk about any investing at all. It's because we've been talking about investing for the last 3 years post 22, which was a financial collapse in the crypto market. So it's like, all right, everything collapsed. We've been buying, investing, building a portfolio, and now comes 3 years later, we have the damn portfolio. What else is there to buy? And we don't have commitment issues. So it's not like, oh, we're selling this and buying that and selling that and buying this. So we're not flip floppers. We have conviction. We're owners. As Charlie Munger says, he's not a good seller. May he rest in peace. I'm not a good seller. I don't like to sell. I don't want to sell shit. I want to pick things to buy. That means I'm just picky in things that I buy. And the things that I've bought, I own. I don't need to buy any more because rule number 2 is in effect. Executed rule number 1, currently executing rule number 2, and everything qualifies for rule number 3. Sit back and relax. I remember saying some years back, at some point, we were just going to sit back and relax during an entire bull market. I believe that was in 23. I believe that was 23. I wasn't 22. Maybe it was maybe Q4-ish 22. But that's now because we put in the documentation work, the business structure work, the legal work, the investment work, the OPSEC work, as best as he can, because obviously everybody knows who I am. But who am I? I don't, but barely any capital compared to these dumb fucks. Dumb. Some of these people that have had OPSEC issues are just very exuberant people, not humble. I would hope that I don't fit that characteristic. I would hope I present as humble. I literally have my children's drawings behind me, and there's nothing exuberant about my lifestyle. There's nothing there. Waste. I'm a waste of. I'd be a waste of a target. Like, what are you gonna do? I have like 50, if folks really knew what I had in available cash, that's the whole thing. There's such a remarkable difference between available cash and investments and illiquid investments. You can't sell. I have literally nothing I could sell. I own nothing that can be sold other than like 50% haircuts on what like Shadow or 30% haircuts on V33 stuff. And that's the number would be pretty sad, but the cash flow is adequate from a lifestyle perspective. And it's exciting for me to talk about because that you don't folks would be surprised how little you need to reach a good state. And what's a good benchmark? If you've made 4 grand a month in your 20s or 30s, and now all of a sudden in crypto, your investments are producing 4 grand a month. Holy fuck. In my opinion, that's like the holy grail of investing, where you're able to replace, but you don't replace because you never quit your day job. But if you're able to make with investments the amount of money you used to make at some point in your life working, to me, that's the definition of made it. Come on. Stop trying to do stupid shit, folks. Because that to me is a big deal. That I don't know. Call that call that whatever you want. I think that's humble. If you used to make 4 grand a month working your ass off in your 20s and 30s, and now with proper investments, you're able to make 4 grand with investments. Oh my God, done. That's made it. That is, oh, that's such a big deal to me. Hey, Cap, just finished playing some ball and a sauna sesh. Focus on lifestyle, focus on mental states, jump in the sauna, do a little physical activity, and investments, you know, then you're able to approach them with a calm, clear mind. And that is a prerequisite for effective investing. Last couple questions. What are your thoughts on a central bank narrative with Frax? Can you elaborate? They've had that narrative since they launched. They retained that narrative to today. The extent of what I could possibly say about Frax is two things. One, I've had an investment in Frax for years since they launched. It's one. Two, they are great tech, astounding technology. I love my investment in Frax. Three, great tech isn't always the best investment. And that's Frax share. That's Frax, ladies and gentlemen. One, two, and three. Central bank of crypto. I don't think there's any question about the tech stack that they have. And they go to launch their own chain, Fraxtal. I mean, it's literally lovely tech. Brilliant, breathtaking. Their on-chain balance sheet. Absolutely love it. As Era mentioned, show some shoddy cross-chain liquidity. Frax Ferry works great, but nobody wants that. They want Stargate integration. So, it's great tech. Great tech isn't always the best investment. And I retain my position. I have locked. I have locked FXS. It's not even called FXS anymore. It's called Frax. But I have my FXS locked on mainnet forever because it's not sellable. So that's literally my OPSEC. I have nothing that could be sold. I I'm I'm worthless. But that is the the appropriate perspective to have is the cash flow. As I mentioned, if you made 4 grand in your 20s and your 30s, and now you're making 4 grand a month from investing, that's a lifetime achievement. That's the pinnacle of winning, in my opinion. All right, so bump it up. Maybe you made 10 grand a month, and now you're making 10 grand a month investing. You made it. It's all relative. But I think if you can match what you used to make working with investments, I that is my that's something that I think is serious and very meaningful. A good threshold for people to keep in mind. Friday, May 16th, 12:32 p.m. Thank you all for joining me today. 109 people made it to the end of the stream, and you are all now a little bit more rational because of it. Enjoy your weekend. Don't, not meditate. If you have the patience, meditate. I don't necessarily have the patience for meditation. What I do have the patience for is the sauna, solfeggios, the frequencies, and sitting in the sun, get sun. Enjoy that and deprioritize investing. There's not much to do. There's only a couple of dozen names of investable products in these crypto markets. So how much is there to think about? And once you realize, hopefully more and more people will get to that point where there's not much to do. And then you finally realize what it is to be an investor, where you realize investing is letting time pass by, and time does the work. Enjoy your weekend. See you on the flip side. Peace.